Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Warren Buffett and Berkshire Hathaway reporting some earnings over the weekend. The question I always have is how much cash do they have on their balance sheet?
Everybody always wants to watch that as a contrarian potential indicator for the stock.
I just don't know what's going on over there. But our next guest does. Matt Palazola, he's a senior analyst covering the insurance business for Bloomberg Intelligence, joining us here in our Bloomberg Interactive Broker studio. Matt, what did you take away from the Berkshire's results on Saturday?
So, Paul, to answer your first question, $325 billion in cash. That's the most they've ever had. So when you look at their earnings, there's a couple of layers you have to unpeel first. Their GAAP earnings were swayed by investment changes. Buffett himself has said you kind of just throw that out. We don't really look at that. It was like 26, I think, billion versus an 11 billion loss in the year ago. Those numbers are a little bit irrelevant. The next part is their earnings from operating companies. Those, if you look at just the number they give you, those were down about 6%. What happened there, though, was they have a lot of yen debt, and there was a big Forex loss in there. So peel that back. The operating company's earnings were up a little bit, which was less than I expected. The insurance operation had a couple of unforeseen negatives in it, and that really turned it down. Some of them I don't think are ongoing things, but that was really the negative variance was in the insurance business.
Something, because we were actually chatting about this earlier when it came to the percent of their cash pile at Berkshire Hathaway. So the last time it was around this high, the stock market still continued to move on to records over the following 52 weeks. But then the last time on this opposite end of that, the lowest percent of cash he had at any time over the past decade was right when the S&P 500 briefly peaked in 2021. So what's your thoughts whenever you're kind of thinking about what this could mean more broadly for where like major indexes and equities could potentially be headed?
Yeah. So, I mean, Buffett is a more of a time in than timing of the market, right? Clearly. So I don't think he's making big moves on large expectations on the market. If you look what happened, they sold about $22 billion worth of Apple stock in the quarter. That's along with about $9.5 billion worth of Bank of America stock in the quarter. I don't think you look at that and say, okay, he's completely bearish on everything on the market. I think those were, unique things. They were highly concentrated in Apple. Their Apple position is down 70% from its high. In terms of the shares they own. So I think those things were unique to the stocks they own. Buffett has repeatedly talked about taxes going up. I don't think it's even an election cycle now, but he's just saying even longer term, there's probably only one direction taxes are going for us, and that's up. So you'd not be surprised to see them taking large gains off the board.
So $325 billion, is there any realistic scenario for deploying that capital over a multi-year period?
It's tough. They are limited in how much shares they can buy back just on the float. We had wrote, it's tough to see them doing a tens of billion dollar acquisition. There is the ownership in Chubb out there, which is, perhaps the mega deal that may or may not ever happen. If they do something, they bought Allegheny, which was an insurance company, kind of conglomerate a couple of years ago. That was about $12 billion. It seems like that's going to be the max on what they're going to do. But if I could predict what Buffett would do, I'd be on an island somewhere. So,
but no dividend.
There will not be a dividend as long as Warren Buffett is sitting in Omaha.
Why is that?
I mean, I think he likes getting them. He doesn't like paying them. He says, look, and I would agree with him. I'm better off holding this money than giving it. Your return on a dividend is going to be less than my return investing it. That probably hasn't been true actually recently, but I think that's his mindset.
You were mentioning about how claims they wrote years ago are costing them more than expected. Walk us through that dynamic.
Sure. So this is called reserve development. So what happens is insurance companies, like, so for example, Geico, they write auto, some home, well, not really home, but write auto. You're either going to have a car accident in a year or you're not. But they'll write some liability business where you may have a claim and that you might find out about that claim years into the future. And what is happening is you set up a reserve for that, and that reserve could be wrong, or they're almost always wrong, right? But it could be wrong too low or wrong too high. And what had happened in the quarter was their reserve for their primary insurance business, a specific unit of it, was quite wrong. And there's new management took over that unit, and usually when that happens, they add to their reserves. If this was just a XYZ insurance company, this would be really bad. But it's Berkshire. Their financial strength is so superior to anything you might see that it's kind of just a blip.
I got a Vespa scooter. Progressive wrote the policy on my Vespa scooter.
What were they thinking?
Wow, I wasn't ready for that.
Always wear a helmet. That's all I can say.
I do have the helmet. Progressive, give me 30 seconds on Progressive, because so far I'm happy with.
Yeah, I mean, so Berkshire themselves has kind of been saying Progressive's ate our lunch for the past decade. Mm-hmm. Progressive, extremely innovative in pricing, which allowed them to kind of take a lot of market share. State Farm is kind of the big name there in auto insurance, and Allstate's just been picking away. I mean, not Allstate, Progressive has been picking away at them. The recent spike in auto insurance prices, they navigated that a lot better than the rest of the industry, which is allowing them to pull more share. Geico is shrinking, Progressive's growing. Really best operator in the auto insurance space, Progressive.
And actually,
good choice.
My existing insurer, which I've got like 5,000 lines with, their pricing was twice where Progressive was. So I'm just like, see ya. I'm going.
They don't know how good of a risk you are.
Exactly right. Me, the Vespa scooters, cruising the Jersey Shore. John Tucker, what do you? That's a view. This is Bloomberg.
If you see him coming, get out of the way.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, Jess Menton sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. Streaming live as well on YouTube.com. So search there for Bloomberg Podcast. The election tomorrow, obviously one of the key issues driving this market for some time. Let's get the latest analysis here. Maya Wiley joins us. She's president and CEO of the Leadership Conference on Civil and Human Rights. Joining us via that Zoom thing here, so that comes in handy. Maya, thank you so much for joining us here. I guess what we hear from a lot of the experts is this is too close to call. What are you hearing from some of the folks that you talk to?
Well, certainly what we know is that voters are going to decide the outcome of this election, and absolutely cannot predict based on the polls. What we can say is what we're seeing in the absolute enthusiasm to show up to these polls, even in early voting. As we know, Election Day is tomorrow. But I was in Pennsylvania on Saturday, where thousands of doors were being knocked all over the state. Lots of high levels of turnout across not just Pennsylvania, but other states. We're hearing already for Detroit, Michigan, for example, 51% turnout for early voting. Michigan is also one of those states that has same-day registration, meaning people can show up at the polls and register to vote and then vote tomorrow. So what our own Civil Rights Monitor polling showed in September that the Leadership Conference did with Brilliant Corners was enthusiasm is high on all sides in this election, and we're seeing that at the polls.
Talk to us, Maya, about what the mood is like in some of these key states and these battleground areas.
Well, I've been to Milwaukee, I've been to Detroit, I was in Pennsylvania. I think the mood is everything from completely motivated for folks to show up and have their voices heard at the polls, and anxiety. I mean, the anxiety is understandable. There is a lot at stake in this election. People are feeling it. There's also been the reality of disinformation and the flood both from foreign governments like Russia, like China, like Iran, trying to sow division and confusion. And sadly, some political leaders, some organizational leaders, some politicians picking up on that disinformation. So a lot of work on the ground across the country to make sure that voters know where to vote, how to vote, and that their votes count and will be counted, because we do have an exceptionally impressive election system in this country we should be proud of. And that's a big part of the work that people are doing on the ground.
And Miley, a lot of experts are telling us to really be mindful of the turnout. That turnout's going to be really critical for both sides, actually. What's your understanding of maybe is one side better equipped to get the word out and the turnout going?
Well, look, certainly it's a turnout election. I would argue all elections are actually turnout elections. When voters show up, they decide who lead us. And so the more voters who show up, the more we have a true reading of the country. The voter motivation is very high. Turnout is exceptionally high. We're already seeing numbers of turnout that are historic. They're approaching 2020 numbers. Remember, President Joe Biden won the most number of votes of any president for over 100 years of voting history. This is on par to be a historic turnout election. I think the point about who does that benefit? I mean, both sides, all sides are showing up. The real question is, what do voters want and what's at stake? And how many of these voters are new voters or voters who did not show up in 2020 or in 2022? A lot of the get out the vote work has been focused in the civil rights community and certainly by us at the leadership conference of making sure those people who can vote know where and how to vote and feel that their vote matters and will count. And that's why I think we're seeing high turnout, is people are feeling that.
Whenever you're speaking anecdotally to Americans across the country, what's more specific when it comes to policy proposals do they constantly keep bringing up to you?
Look, people are very concerned, obviously, about everything from the state of our democracy and our freedoms, particularly abortion. But in communities of color, criminal justice reform is a huge issue, as is education. But I think we also know that across the board, costs are an issue. And, one of the things that's been so clear in this campaign is, when Kamala Harris speaks about the fact that she is not going to drive up the cost of groceries, but Donald Trump obviously talking less about costs and more casting aspersions. I mean, people are really trying to listen for, how is my life going to be better? And they're responding to where and how they're hearing very clear messages about what things they would see and feel in their own households and communities. I think that's also why we're seeing so many women vote, because abortion and access to abortion as an issue of healthcare. Reproductive freedom is not just reproductive freedom, it's also the ability to get the care you need, including if your life is in danger. And we're seeing that as a huge motivator and topic of discussion. And I think that's part of why we're seeing what we saw in that Iowa poll, which showed, frankly, that women were turning out in droves. And we've seen that gender gap, so many women engaged in this election. And that is a big reason.
Right. Maya, thank you so much for joining us. We really appreciate getting some of your time. Maya Wiley, she's the president and CEO of the Leadership Conference on Civil and Human Rights, giving us her preview of, again, the selection for tomorrow.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Katy Kaminski joins us. She's a chief research strategist and portfolio manager at AlphaSimplex Group, joining us via that Zoom thing. Katy, when you look at the markets broadly defined here, what are they kind of telling you about the next 24, 48 hours? Or do you just try to power through all that stuff and think about longer term?
Oh, this is tricky. I mean, I'd say that as a trend follower, we tend to think about holding the course. But it's really hard. I mean, you're seeing today some reversal of trends that have been following from the last month. Really, yields have moved so much. Yields have moved so much higher. You're seeing a reversal of that today. You've seen the dollar had been sort of on a tear and then now is reverting again. So there's just a lot of uncertainty in the short term. So actually powering through is probably a better way to sort of handle all of this volatility.
Katy, I wanted to pick your brain about poly market because we've seen it a bit all over the place in recent weeks, sometimes favoring Trump, whereas over the weekend you started to see that narrow out and begin to favor Harris instead. So as a trading kind of strategy, why would an investor use them for a trading strategy over polls? And why are they using a betting website over polling for judging sentiment? Because obviously, as we know, it's not really correlated to who would actually end up winning.
Well, this is a good point. And I mean, I think it has to do more with market price discovery. And I think people have a lot of faith in sort of market pricing of odds. But then, obviously polling could be sort of a different demographic group. So what's really making a lot of people, I think, even myself, is you see the news and it's just flipping back and forth. And there are very different outlets pointing to different observations, and that just suggests how incredibly uncertain and tight this race really is. And people are probably also looking at those areas which kind of they're used to. So I think the picture is very mixed.
So, Katy, from your perspective and just maybe your equity allocation here, have you hedged it at all, or are you just positioned that we're going to be fine no matter who's kind of controlling things down there in Washington?
Well, this is a good question, because as a trend follower, our goal isn't really sort of to add a discretionary view on what we do. We're just measuring where market directions are moving. And you have seen some momentum in equities over the last 6 weeks. But I think the biggest thing that people have been focused on is not necessarily just equities. It's just how much long bond signals have dissipated, even going short in US fixed income in some ways, and also how much the dollar has moved. But it's a short-term move and things are still very mixed. But US equities seem to be the most robust signal, which tells you maybe we're going to be fine either way. Let's hope so.
When it comes to Congress and the makeup of Congress, and particularly gridlock, because when I've been speaking with a lot of portfolio managers, especially when they're managing money for longer term horizons, they haven't been making big bets either way, because a lot of times, even if they have certain policy proposals, as you know, it would take some time here to figure out whether or not those would get passed. So how much to you, when you're thinking about gridlock in Congress, will that make certain trading decisions in the coming months, or even having to wait on that once you know more of what that could look like in Congress when you think about the House as well as the Senate?
I think you make a good point. It's just, if you think about NPV, or sort of the value of the markets, it's really about weighing the different possible outcomes. And even though we're going to have at least hopefully some resolution in terms of the election, it still is quite a long road for many different policies, particularly if you have a gridlock in Congress. And that means that status quo is probably closer than sort of these extreme scenarios, which people are trying to discount and evaluate. And so I think that that's why, if you look for the overall trend, equities still remain somewhat positive, because the path to all of more extreme policy is actually a long one, and it could take time to know, and we should have more information as that changes.
Katy, in the world of fixed income, how much credit risk are you taking, if any, these days?
So we don't focus on credit risk, but I know that's been an area recently that has been very interesting, especially with yields higher. I think the fact that you didn't see a lot of credit deterioration in August was something that surprised me. We're much more focused on the directional level of yields, and we've really seen a major pivot towards higher, longer, steadier Fed reaction. And I think that sort of is obviously going to impact credit as well.
Katy, thank you so much for joining us. We always appreciate getting a few minutes of your time. Katy Kaminski, she's the Chief Research Strategist, and she's a Portfolio Manager over to AlphaSimplex Group.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
In our Bloomberg Interactive Broker Studio, we're streaming live on YouTube as well, so check us out there. Trump trades, which is basically long the dollar, short bonds. Are you long the Trump trade? Are you not? It seemed like the narrative maybe changed a little bit over the weekend with some new polling. I don't know how, if you're a trader, you're playing this thing. I don't know. But our next guest has a great big take story on us. You know we love the big take stories coming out of Bloomberg News. Great topics, deeply resourced, deeply sourced.
Always great visuals and charts
awesome,
in these stories,
which I like the
too.
pictures. The pictures help me. Katherine Burton joins us. She's a senior reporter for Bloomberg News. She joins us here in our Bloomberg Interactive Broker Studio. So, Kathy, what are traders on global Wall Street? What are they trying to do here ahead of this election? Are they trying to play it? Are they trying to hedge themselves? What are they doing?
They're trying to do both, actually.
Okay.
I would say that most of the traders have a slight tendency towards the Trump trade that has maybe reversed a little bit overnight with the new poll that showed Harris ahead in Iowa. But there's also a lot of hedging going on. People are betting on inflation, they're betting on a steeper yield curve, and both those things should make money no matter who wins.
It's interesting because when I've been speaking to a lot of portfolio managers who are managing money for longer term, they're still kind of on the sidelines and are more focused on the Federal Reserve and kind of the direction of the economy. But when you're talking to, say, hedge funds, which obviously have a much shorter type of time frame, what is the mood like there, and how exactly are they priming their computer models for a moment like this and how they're trading? Because obviously they have a different time horizon than, say, somebody who's managing money like 5-10 years out.
Right. So we spoke to one of those managers who has a pretty substantial quant aspect to their portfolio. And they did, over the past few months, and because it's only been a few months since Harris came into the election, they've been looking at polls and betting markets and trying to put that into their models and isolate how asset classes move with a rise or a fall in the polls. So people have been rejigging their models to try and get a better idea of what to do.
Global Wall Street, I mean, they're getting ready for this thing. JP Morgan Chase, you report, plans to increase staffing in Europe and Asia to handle overnight volume and volatility. Goldman Sachs expects to have hundreds from its sales and trading teams on site in New York well into the night. So Global Wall Street, they're gearing up for this. It's not just going to wake up and see what happened.
Yeah, absolutely. And we have even smaller brokers who have never had people overnight before for an election saying that this election they might well have to have someone there throughout the night.
Something else I was keeping a close eye on is when you're looking at the CFTC data. We get updates every Friday at 3:30, so always convenient right before the closing bell at the end of the week. But hedge funds were, of course, betting on bigger price swings coming up. Probably not surprisingly, so when you're looking at large speculators turning that long on VIX futures for the first time since January of 2019. So whenever you're speaking with your sources, specifically when you're thinking about the options equity side of things, what are they telling you with as more specifically of how they're trying to hedge or what they're trying to either buy or kind of shy away from at this point?
Yeah, there's definitely been more VIX buying because they do expect that there's going to be more volatility. And also more futures as well.
Something I was wondering too, because you have such a jam-packed week and then other events coming up in the coming weeks too. Obviously the election, the Federal Reserve, we have a 13F filing deadline coming up too. We still have about 9% of the S&P 500 by market cap reporting. And then of course we have NVIDIA actually coming up on November 20th. So when you're speaking with them, do they say there's a specific event? Obviously we know the election's tomorrow, but is it harder to decipher one event versus another?
Yes, absolutely. I mean, the Fed is really a huge thing. And I think more people are looking at what's going to happen there than anything else, even the election.
Right.
So the popular Trump trade, again, long the dollar, short bonds, is that unwinding today a little bit because of this new polling data that came out? Does it move that short term?
Yes, it has. The last time I looked, the dollar was down almost 1%, for example. I think crypto is down too. Yep.
Yeah, we got crypto, Bitcoin down 1%. The Bloomberg Dollar Index down about 0.6%. And the people buying the 10-year Treasury up 24-30 seconds. So it just day to day, it seems like.
Yeah, absolutely. And what will be really, as we start getting results, it's going to be even more frequent.
Right. Talk to us about the implied price swings that the options market's pricing in the days after the election.
Meaning what exactly?
Kind of like the elevate. So Citi, for instance, Stu Kaiser at Citi, he sees on actually a Wednesday, so the day after the election, the S&P 500 could swing about 1.8% in either direction. But obviously we know we'll have the Fed decision on Thursday too. But do you expect to see heightened kind of volatility, particularly in the VIX and then in options and futures markets, especially, in the coming days and then the coming weeks too?
Oh, yes. Particularly in the dollar, people have told us that that's something they're really, really going to be watching because they feel like that's going to be something that everyone will be looking on, even people outside the U.S. because of the trade issues and such.
I mean, that makes sense.
Yeah, but there's also a chance that we're not going to know for some time if, this thing could drag on for days. There could be legal challenges. So our fund managers, are they kind of positioning themselves for that, or is that just a matter of hedging, I guess?
Yes, I think that's mostly hedging. Although some people, I think Goldman Sachs had a note out that said that even if we don't have a precise decision, that there will be certain things that will lead the market towards a conclusion of Trump or Harris.
How about just in terms of going forward? I mean, a lot of folks say, don't worry about who wins the White House because it's going to have a gridlocked Congress.
Right, the makeup of Congress,
yeah,
right?
Exactly.
Traders will usually focus on that. That's interesting, too.
Are traders looking at that as well?
Absolutely. We definitely had people say it does not really matter as much who is president, at least in the short term, as whether we have a sweep in Congress or not.
And it's specifically when you think about policy proposals, whether they affect, obviously, trade, if you think about big tech regulation, healthcare regulation, are there particular types of policy proposals that those traders are looking at that they want to remain gridlock in Congress so that obviously the status quo would stay in place and there wouldn't be big changes to different policies for those types of industries?
Yeah, definitely. I mean, I think crypto is one. Mm-hmm. I think clean energy is another one that a lot of people are looking at.
All right, Katherine, thank you so much for joining us. Katherine Burton, she's a senior reporter for Bloomberg News, joining us here in our Bloomberg Interactive Brokers studio. The Big Take story out on the Bloomberg terminal. You can read it on the terminal.
Great stuff.
Yeah, it's always great stuff. We love having talk about these stories. So you can read it on the Bloomberg terminal. You can also go to bloomberg.com/Big Take, and it's interesting to see how the markets are reacting to just seemingly daily swings and kind of how the polls are moving here when you take a look at some broadly traded asset classes like currencies, like bonds.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Steele will be back in a couple of weeks. That'll be a good and wonderful thing. We're here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. All right, I'm going back to that Big Take story. The Trump trades, which is long the dollar, short the bonds, seems to be unwinding a little bit here. I wonder if you manage $1 gajillion like the good folks at TCW do you even care about that stuff? Are you looking through to the bigger picture? I don't know how they do that stuff there. Ruben Hovhannisyan, he is a Generalist Portfolio Manager at TCW's Fixed Income Group. Ruben, what are you and the smart UCLA grads, which seems to be you guys own TCW, the UCLA school out there. What do you guys, when you sit around in your Monday morning meeting, what do you say about the political backdrop here? Is it factor into what you guys do, or do you just kind of plow through and focus on the building blocks?
Good morning. Thanks for having me to be back on the show. We are not playing the political noise. We're looking through the noise and we're positioning based on our convictions, based on the value that we see in rates, in duration, and certain parts of rates. And from that perspective, the trade that we saw materialized in the last month or so since late September, where we've seen rates higher by 50, 60 basis points across the board. We saw it as an opportunity to add to our duration exposure in the front end of the curve and do some other stuff, add to some sectors that are that got sold off and got hurt by the duration, by rates selling off. We think that the sell-off in rates, as you can see this morning, we see a partial reversal of the sell-off that we saw since late September. And I think it's a healthy reminder that we haven't heard, if you think about it, we haven't heard a lot of new information. We knew it was a very close election. As of this morning, we know exactly the same, that it's a very close election. So we're kind of splitting hair here. And we think the markets got ahead of themselves in pricing in a very extreme scenario and very high probability of Republican sweep. So we saw it as an opportunity to express some of our trades, some of our trades that are based on the value that we see in rates.
Heading into some of these big key events this week, what do you think speculative positioning in the bond market is telling us?
Well, we think the speculative positioning in the bond market, and of course, it's hard to decipher how much of this sell-off we think the sell-off that we've seen in the last 4 or 5 weeks is driven by some better than expected data that we saw, especially in the first half of October, which we would recommend to take with a grain of salt. And then some of it was this Republican momentum. And it's telling you that investors are pricing in a very high, again, We saw a partial reversal of that this morning, but generally speaking, we think the data tells you that investors are pricing in very high probability of a Republican sweep, and add that a very high probability of some extreme agenda being enacted and implemented conditional on that Republican sweep, which we think is certainly a scenario, but we think that the weight assigned to that scenario is much higher than is justified. Again, what we're seeing this morning is probably a healthy reminder of that.
I'm looking at the INGO function on the Bloomberg terminal, and I see the best performing fixed income category is there being U.S. Corporate high yield at almost 7.5% there. What's your call on the high yield market? I thought we were concerned about recessions.
So we think that we are in a hard landing camp. We remain in hard landing camp. But we have seen spreads compressed in credit in general. We have seen spreads compressed across the board, both in investment grade and below and high yield. In fact, if you look at the spreads against their history, they are currently comfortably in the top 5th percentile. Generally speaking, if you look at investment grade credit spreads, they are in the top 1st percentile, meaning spreads have been wider than where they are now 99% of the times. The stats are a little better for high yield, but similar. So we think the market is very optimistic about the economic scenarios and outcomes, and is not compensating investors sufficiently for the potential volatility associated with the worse economic outcomes than the market is currently pricing in.
When you're going into a pivotal week with a barrage of different events here, what is some of the questions that your clients are asking you?
Well, it's what you would expect. It's the questions that your guests are asking you, or you're asking your guests. It's what will be the outcome of the election, and what that really means for the economy, and what that really means for the markets. And we think that there is currently a lot of extrapolation. There's a lot of uncertainty, and that's probably an understatement. And there's some fear, and there is also some extrapolation from 2016 experience in terms of rates and what the election will mean for rates. And we do think that those parallels that are being drawn by some investors, at least, are probably not justified, because we're sitting at a very different environment. We're sitting in a different regime. In 2016, in late 2016, as you remember, the Fed had just embarked upon interest rate hiking path. We had just come out of the 2015-16 mini crisis in energy and commodities. This time around, we think we're late cycle. The Fed has started its interest rate cutting cycle. So it's a very different environment, and there should be a lot of caution in extrapolating from 2016 experience.
All right, Ruben, thanks so much for your time. I always appreciate getting a few minutes of your time to talk about these bond markets. Ruben Hovhannisyan, Generalist Portfolio Manager at TCW's Fixed Income Group. They're based out there in Los Angeles, California.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Jess Menton sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. I'll tell you, one of the best resources that we have at Bloomberg for our clients is BloombergNEF, originally known as New Energy Finance. They're the team within Bloomberg that tracks and analyzes the energy transition. They cover everything, and they do it on a global basis, and all that content's on the Bloomberg terminal. Great stuff. Yayoi Sekine joins us. She's head of energy storage for BloombergNEF. Where are we, Yayoi, in terms of energy storage? Who's doing it well? Where are we in the game? How much more do we have to go in terms of the technology for energy storage?
All right. Well, thank you for having me today. So I'm here to tell you a little bit about energy storage and a lot about clean power.
Good.
So just for some context, and we're going to talk about some of the analysis that we actually published around the clean energy market outlook, specifically looking at the U.S. For some context, there's just been a lot of investment that's been pouring into clean power segments. We've seen a lot of that accelerated over the last, 2 years and since the Inflation Reduction Act passed, facilitating a lot of new investments into wind, solar, and storage sectors, which are the sectors that we cover in that particular report. There's about $300 billion invested across these sectors, so wind, solar, storage, and other clean transportation and other sectors in 2023. That's about 22% higher than we saw in previous years. And then what we're doing in this report is to have a 2035 view. So in the next decade, what do investments and capacity additions look like around these clean sectors? There's actually a lot that's bound to happen in terms of just what's committed to date happening over the next few years, and that's likely to unlock a lot more investment over the 2035 period. I can tell you a little bit more about that if you want to hear about it.
Well, I guess one of the risks is just political risk to those numbers, to that type of investment. If we get a change in Congress, if we get a change in the White House more towards Republican, are there risks to some of those monies that have already been committed or earmarked?
Yeah, so what we did, I guess the way we think about it is to look at what is our expectation in the market out to 2035. So for some context, our expectation in terms of our forecast for wind, solar, and storage installations is about 1.1 terawatt of new capacity additions out to 2035. For context, in the U.S. power grid, as of the end of 2023, there was about 1.2 terawatt of cumulative installed power generation capacity. So essentially, we were about doubling in terms of capacity on the grid out to 2035, but that addition is just from wind, solar, and storage, which is really impressive. In terms of the risk factors to your question, so the way we were investigating that in the report, or analyze that in the report, is to try to think about the worst case scenario. So there's a lot of investment that's already been committed at the back of the investment tax credits and some of the other incentives in the Inflation Reduction Act. But we wanted to look at, okay, so what happens if these incentives, so the investment tax credit actually gets repealed right away, which is, of course, a worst case scenario. It's not our expectation of what will happen, but it gives us some benchmark of what could happen. And under that scenario, it's about a 17% decline. So it's a fifth of capacity that gets dropped or not built in the 2035 timeframe. One additional component is, like, if that actually were to happen, is that projects would try to rush to try to be built before that step down happens, which could happen in the end of 2026 or end of 2025. So essentially, there's a rush to build, a decline in the market, and then the market picks up again, but not at the same rate or not to the same degree as it would in a non-repeal scenario. So that's how we looked at that.
Walk us through the key fundamentals that you think have helped build the industry.
Absolutely. So I think we're obviously in an acceleration mode at the moment. It's almost like certain key elements are keeping the market from growing as quickly as it could. But in terms of the fundamentals in the past, major one is the fact that the cost of wind, solar, and storage and batteries has come down significantly over the last decades. That's really made the cost of these technologies competitive against conventional generation, conventional fossil fuel generators. In the US, that would be trying to displace gas. And we do see in most of the markets of the US, wind and solar are competitive against gas. Of course, they don't deliver energy at all like 24/7, and that's where batteries comes in. So the cost of batteries, like specifically lithium-ion batteries, has fallen by more than 90% over the last decade, which is significant.
How's the US doing? You quote some really big numbers here in terms of investment and terawatts and all those things. How are we versus the rest of the world in terms of, just in terms of really embracing cleaner energy?
Yeah, so on a country level basis, the US is probably second in terms of stacked investments in these sectors. That's because China is really the giant in terms of attracting new investment into wind, solar, and even battery segments. And there's a bit of a pickup game in terms of some of the key segments in terms of the manufacturing side, so the supply chain, and trying to invest that and bring that into the US with mixed levels of comparative success across different sectors.
What should we expect for wind and solar capacity build in 2025 for those forecasts?
Yeah, so we're expecting most of them to grow. That's certainly true for solar and storage. Wind more or less keeping a pace. Generally, our expectation is that there will be more investment going in, and that's because there's just a lot of projects in the pipeline that are essentially contracted to meet utility demand. So a lot of the U.S. utilities have been, contracting more clean power because they, as I said, they're cheaper, but also because they might have some specific goals in order to decarbonize. I guess the other factor is just the corporate side. So a lot of the, the Amazons, the Googles, these companies have increasingly also been looking for cleaner portfolios of energy generation to be meeting their demand.
Yayoi Sekine, Head of Energy Storage at Bloomberg NEF. Thanks so much for joining us here. Again, the good folks at the Bloomberg NEF, they look at I guess within Bloomberg, they really track and analyze the energy transition on a global scale. So they're really doing some cutting edge work there, which is of keen importance to a lot of folks, including the Bloomberg Terminal customers out there. So we appreciate getting a few minutes of their time every week.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern, on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.